Hello and welcome to another episode of Margin Called, the only channel on YouTube dedicated to controlling your losses in the stock market. It has been quite some time since I've made any updates to this channel. As you'll see, I've had some additional losses, admittedly, on a couple of trades I made over the past couple of weeks. Unfortunately, there was a trade that I made on Fed Wednesday. It was following a FOMC meeting. I believe there was a press conference by Fed Chairman Jerome Powell. Probably should have stayed away from that trading day, only because I had actually made a semi-decent trade the day before. So basically, it was just essentially losing all of the gains that I had made the previous day. And I'll be sure to show you that in my monthly summary of July trades. As a matter of fact, I can do that right now. So this is directly from my trading journal in TradeZella. Not a whole lot of trades overall, but unfortunately, as you can see here, on the 25th, it looks like I had one good trade. This was using my scalping strategy that I think I'm going to abandon, precisely because the following day, using that same strategy, I did end up buying a little bit of a top, so to speak, intraday after Jerome Powell had made some statements, and I miscalculated the strength of the move, and it basically flushed out from under me, so I needed to get out as soon as I could. Unfortunately, I did take a little bit of a scraping, I guess a beating, on that trade. Secondly, I might as well just go ahead and show you how I'm doing in terms of this month. I know we're only about a week in, but got some interesting updates here. Unfortunately, I have started doing trades on I guess it would be the futures, the S&P 500 futures, basically. But that's in a separate account. It's unfortunately can't trade futures in Webull. So I've set something up with TradeStation. I've actually signed up for TradingView so I can be able to look at futures data in real time. But I can also connect my TradeStation account there. And I had one good trade on, looked like it was on August 2nd, just shy of about $500. Unfortunately, the next day, I think things had gotten a little bit out of hand, and I gave up basically all of those gains. Luckily, though, I've managed to stabilize the account somewhat across those trades. I'm still trying to get a feel for how futures work, and I have to say, being able to access trading data from overnight and after hours, pre-market, all of that stuff, it's helped me immensely identify support and resistance zones that are actually meaningful to the market. And not only that, even though I'm not really using my alligator trend lines intraday anymore, at least for options trading, as well as the awesome oscillator, I still have those indicators on my TradingView charts, which seem to be working pretty well, I think. But we'll get to that a little bit later. Feel free to leave a comment if you want me to do a little bit more documentation on futures trading. But it's definitely a little bit more to my liking, only because you can really manage risk a little bit more effectively. You can choose your strike prices a little bit more strategically, and you don't really have to worry about the Greeks at all. Those aren't the only benefits of futures trading, but again, you do have to be a little bit careful with how you enter and what kind of environments that you're trading in. With that being said, I think I left everyone here on a little bit of a cliffhanger note from my last video. I said that I was going to plan on buying calls on a potential bounce opportunity on SMH. And as you can see here, this is the SMH, basically the Van Eck semiconductor ETF. And this is on a 1 hour time frame. Again, this chart is in Webull. And this is primarily where I like to do my options trading. Unfortunately, I did not capture these trades on Webull. I actually did this in a separate account that I have with Schwab. So feel free to let me know. It's really nothing to flex about too much. Unfortunately, I probably should have taken profits a lot sooner than I did because there were just some unrealized gains that I had basically lost as a result of the trade. But anyway, I believe I entered the trade basically right around here. I want to say on July 21st. And this was something that I had basically planned to hold out, or not necessarily planned, but I selected the expiration that was about 3 weeks out, I believe. Like at the time, it was in the middle of August, so I had at least 20 days for the trade to work in my favor. It's also worth noting, and I think I mentioned this before, but I believe if you compare this swing low with this swing high, or at least this range of swing highs up here, you'll see that this price range is the 61.8% Fibonacci level. And since it coincided with the 200 EMA, this green line right here, and since that seems to be an area of strong support, I basically decided, hey, this is a really good opportunity for me to get in and be able to capitalize on a potential bounce. At the time, I think I saw that it could go up to as much as 166, but it doesn't really look like that's going to be the case anymore. So unfortunately, I did have to sit through some rather uncomfortable price action. What happened was, it turns out that we basically kind of like built this wedge pattern here on the 1 hour time frame. So as I had basically entered the trade at this zone, I had to wait for this price action to come around, and we had this small bounce up here, and then a little bit of a rejection, and then a small bounce going into that close. And of course, the following day, we made this very nice gap up. And let's just zoom in here a little bit. You can see here that it went right up, basically almost right to where the previous highs were. This is really, if I was disciplined, this is where I really just should have just gotten out and locked in all of my profits. Unfortunately, I waited until the market really kind of sort of began to deteriorate. I still locked in a pretty nice gain. I think it was about maybe like $700 or so. But I probably could have gotten as much as $2,000 if I had just simply locked in those profits there. So options trading, still a little bit tricky. It was very nice to be able to, go out of the money and make a trade like that. Again, with swing trades, it's always going to be a little bit more dicey, and you have to give the trade time to work out in your favor. But that seemed to be a worthwhile investment. Unfortunately, I went about and I found a new opportunity that did not really work out as nicely at all. Let me see if I can actually find this on a little bit of a better example, at least. Unfortunately, it doesn't look like that I really can. But as the days went on, and it looked like the market had kind of like made this real abrupt flush. Again, I'm not sure if this was related to the Federal Reserve announcement, or it was just kind of like the after effects of it. I forget what the actual catalyst was that may have triggered this. But we did see some selling pressure. And we did develop at the time what I thought was actually going to be a inverse head and shoulders pattern. So I was actually expecting another bounce at this up towards this 158 zone. It basically was holding this level of support that it had tested previously. And as you can see here, we do have a little bit of a head, so to speak. Here is our left shoulder, and here is where I thought the right shoulder was at the time. Unfortunately, what happened was we had this real, basically the next trading day, we had this real nice push to the upside, but then it really began to flush pretty rapidly. And I basically decided to essentially lock in a loss on this trade. I think it was maybe about $400. So I still managed to keep at least some of the profits from this trade that I locked in over here. But unfortunately, I did end up taking another loss. Again, this was in my Schwab account. And oddly enough, if I had just decided to hold, I probably would have done more than break even. In fact, I may have actually had a semi-decent trade there. So it's unfortunate that I didn't have that level of I guess I don't want to say discipline, but I guess steel in that sense. But even then, it was too weak to get to the 158 zone. But as you can see, it's from this point, it really is in a little bit of a bear trend at the moment. And obviously, these once price moves into these moving average lines, that's going to be a little bit problematic going forward. And of course, if you've been looking at the markets, if you've been active in the markets, you know that we're in a little bit of a downtrend, which brings me to my next item that I wanted to cover, which is SPY. I have to admit, I think going forward, excuse me, I think going forward, I am definitely going to be including, I guess it would be after hours and pre-market hours trading charts in my data from now on, only because it enables me to see so much more of what the market is doing. And I think I have a little bit of a better understanding of what's going on. And you're going to be able to essentially spot different types of changes in trend a lot more quickly. And I think a really good example is like this trade right here. This is a 30-minute time frame. We have a whole bunch of different moving average lines, but we have a clear rejection right up here at the 200 EMA. Let's see what happens when I deactivate extended hours from this chart. So yeah, it's still showing that rejection it's only at the 100 EMA though, but we can be a little bit more confident overall about just what it looks like from a 30-minute time frame perspective. Just curious to see actually what that looks like on a 1 hour. Yeah, we still have that. It's technically the beginning of a bear trend in this instance. We still have that 200 EMAs acting as support, but sure enough, as soon as you activate extended hours, you get a completely different picture. And I think this is really going to help in terms of just like understanding potential areas of resistance and really what to be on the lookout for overall in terms of like either potential opportunities or danger zones. But primarily what I wanted to highlight here was just the fact that we do appear to be printing what I think might be a descending triple top pattern. This is a little bit aggravating just because it's taking place over a series of days. I believe we've got CPI data coming up on Thursday, so I can't help but wonder if the market is kind of just bouncing around in between zones and acting in a channel until we get a more clear picture on what that CPI data looks like. But again, it's very nice in the sense that we have, at least on this chart, this is our 200 EMA is yellow. I've decided to use the 50 EMA as like my counter to the 200 EMA to help me better, I guess, identify when the market is beginning to spill over. For whatever reason, the 21 EMA was giving me a few false signals, I guess you could say. So the 50 being a little bit of a slower time frame, I guess, might be able to give me some better indications of what the market is doing. But as you can see here, we do have, it looks like one top there that we shaped at the beginning of the month. We've got another top here that we kind of basically printed yesterday. And sure enough, I didn't realize how strong it was going to be going into the close today. But we basically made a bottom in the morning. And from there, it was just almost essentially nonstop buying, at least if you're looking at like a 30-minute chart. So overall, I'm going to continue to keep a sharp eye on this market. We'll see what other opportunities show up. But I do have a sense that given the bear trend that we're in, I can't help but wonder if maybe by the end of the week, we really kind of get into the low 440s. And maybe even into the 430s. I still have to mark up some additional support and resistance zones on this chart, but yeah, I definitely see like the low 440s as a real potential possibility, given the circumstances. But then again, who knows what it could be, especially with CPI coming up. We may see another bounce to the upside before any sort of selling resumes. But with that being said, thank you again. Feel free to like and subscribe to the channel if you want to see more content like this. I'm hoping to get into a little bit more of a regular cadence. It's been a rough couple of weeks between these trading losses as well as my day job and traveling for work and whatnot. I should warn everyone, though, I am going to be out of town again. Thankfully not on business, but I do plan on taking some time away, potentially from the charts, but mostly from the day job, hopefully getting in a little bit of fishing. But I do hope to be back in the bandwagon and definitely doing more consistent reporting on a regular cadence going later into the month and certainly into September. So, again, if you like this content, if you enjoy it, please feel free to like the video, leave a comment, and of course, subscribe to the channel. Otherwise, whatever you do, don't get margin called.